We are live. Happy Thursday, everyone. Welcome back to another episode of Benzinga Live. I wish we were talking about how the markets are up today and all these things, but as I'm sure you guys are aware, that is not the case. Yet another absolute bloodbath out there today. Let me go ahead and get my Benzinga Pro pulled up, and we'll just run through the major indices real quick to check on how everything is doing. The S&P 500 down 3%. Let's go to the daily chart here. Just giving up all of those gains yesterday from the post-Fed rally, unfortunately. So, let's check in on the Qs here, down almost 4%. Actually, we're coming back a little bit on the Qs. Let me go to the 5 minutes. So we got all the way down to this 270 level, lows of around 270.74, and now we're back above 272. So some people are out there buying. Look at these volume candles, got a little bit bigger down here, but now we're selling off again. Looks like we kind of failed to break out above this 273 spot, so now we're trading back lower. I would just be watching the lows of the day. If you guys are like day trading this at all, watch the lows of the day. I mean, if you want to go long here, you can set a stop right here at 271 and know that if we fall through that, we're probably going a little bit further. Let's check in on our good friend, the Dow Industrial Average. Everything is just down. I think, if the Dow goes below 30,000, it'll be the first time in more than a year that the Dow reaches that point. So a lot of people are just watching, kind of trying to figure out, like, when do buyers come in, right? In my personal opinion, I still think we have further to fall on the S&P, right? If we go and look at a weekly chart and zoom out, I mean, it's not like we're hitting any meaningful support here, really not until the 350 level. And then again at 330, if we get back to these levels from before COVID, I wouldn't mind it there at 330. I wouldn't mind going long there. I think if we get down to that point, we'll be down nearly 30% from the all-time highs in January. But what I'm anticipating is that when companies report earnings in, July for the second quarter, there will be a lot of companies that report very underwhelming quarters. So whether you're talking Tesla, Apple, Amazon, some of the biggest stocks that really move the market may report not so great earnings, causing the overall indices in those specific stocks to fall even further. And that's kind of where I foresee sentiment bottoming out, right? Where we can finally get that capitulation where, after those reports, maybe that is where we kind of hit rock bottom essentially, and then things start moving up from there. But with that said, talking about when we finally do get that bottom and things start moving up, we talked about this with David Green the other day, that you're not going to know when the bottom, we're not going to know when the bottom was until, weeks after it. We're going to look back and say, oh, that was the bottom. We're not going to know the day of. I mean, some people may time it perfectly, but for the most part, it's going to be something that is only seen in hindsight. So the way I see it is, when we do get that bottom, when we stop going down, I don't think we're not going to see a move like this, right? We're not going to see, so we're looking at the S&P 500 here. If I zoom in from the COVID crash, and these are weekly candles, 1, 2, 3, 4. So for basically a month, basically all of March, we kind of came straight down, and then finally we had this huge, March 23rd, this week, it's up 10% in 1 week. The S&P 500 went up 10% in 1 week. That's 2% gains, more than 2% gains every single day for that week. Just an incredible week. And then we were back at our pre-COVID levels within 5 months. I don't think we're going to see that. I don't think we're going to see us get back to these levels within 5 months whenever we do bottom out. I think it'll be more likely we kind of trade sideways for a little bit. I mean, let's go back to 07, 08. And I don't think we're really in an environment like 07 and 08. But, I mean, you can see here just how ugly and bad this was for a very long time. I mean, this drew on for a while, for a lot longer than a lot of people suspected. I mean, we came from 155 down here to 125. And then, so almost like a 20%, 15% drawdown here. And then we had some positive movement, and a lot of people thought that was the bottom. And people were buying, and anyone who bought up here got burnt we dropped another, 30, 40%. Look at this one weekly candle. I'm going to zoom in here. Down 19.79% in 1 week. That was in October of 08. But look how long it took. I mean, so let's check the level. So we were at 157 at the highs in October 07. And it took until about here, February 2013, to get back to those levels. So 5 years, right? And other kind of crashes, right? If we go back to 2000, 150 all the way down to 180. We weren't at 150 again until we got up here, until we got to the 07, 08 top. That's another 7 years. So a lot of times these drawdowns, like it take a while to recover. I don't think we're gonna have this V-shape, V for Vendetta recovery. I think it's gonna be more likely that we kind of trade sideways for a while. And maybe we're inching up, but that's what I think it'll be, inching up. I don't think we're gonna get this violent rally to the upside that erases all of these losses. All right. Just realized we have not played the intro yet. Oh, Matty Ice, you've had a profitable past few weeks. What have you been trading? You've been doing some of your iron condors. Matty Ice, we got to get you back on the show. That was fun. We got to do it again soon. Calendars of 2 to 3 weeks and condors have been superb. Hell yeah, Matty Ice. Congrats. Well, Matty Ice, I'm glad you're tuning in today because today's title is how to trade options when the market is crashing. So please, Matty, and anyone else who's been trading options in this environment, lay out your strategies. And we'll talk about a few different strategies, going from kind of just more basic strategies to hedging your portfolio to more kind of advanced strategies like what Matty Ice is talking about. Honestly, Matty, Luke might be coming on later. If he doesn't, you should hop on today. You can talk about your iron condors because I think that is one of the very interesting ways to trade this environment. All right, y'all, let's go ahead and get that intro going and start the show.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
Alrighty, guys, just quick rundown of what we've got planned on the show today. Here in about 5 minutes, Vivi, the biotech queen, should be joining us. We'll be talking about what's going on in the biotech space. Biotech, like everything else, is just continuing to get hit. But, when things get hit, that's where a lot of opportunities are sometimes. So we'll be talking about some biotech stocks with Vivi. And then after Vivi, I've got one of my good friends, Steve Kalayjian, coming on, who has not been on in a while. But Steve has been in the markets for years and years and years, and he's a great technical trader. And, I like to get guys like Steve on in times like this because for me and for a lot of other people, like this might be, outside of the COVID crash, which, we just talked about how quickly we recovered from that, the first real bear market that a lot of investors are experiencing. Well, not for Steve, right? Not for people that have been around longer and that have that experience, which is why I think it's great to get those guys on at a time like this. I also want to talk about oil and gas because we're finally seeing that even Chevron, even Exxon, who had been, the kind of, they've been the diamonds in the rough. Everything has been so weak, and these oil stocks have been so strong. You can see right here, we're looking at the daily candles. We went up from about 140 all the way to 175 in like a month. And then we were still strong up here, got all the way to 182. And we're finally giving up some of those gains, making a really, really big move to the downside here, moving from 180 to 156 in the span of 1, 2, 3, 4, 5, 6 trading days, dropping off more than $30 on Chevron. Let's check out DRIP today. So DRIP is the direction bear leveraged oil and gas fund. So basically when oil and gas stocks like Chevron go down, DRIP goes up, and it goes up basically double. And you can see how well that tracks. I mean, Chevron, which this tracks more than Chevron, but we're going to use Chevron as a proxy since that's what we just checked. Chevron was down 4.7%. Double that. This is what you get. So I actually bought some drip. Hold on, let's see. We're looking at the daily chart here. I bought some drip. Let's see. I bought it somewhere down here. I'm up like 30% on it, but I kind of want to keep holding. Like I just don't. I mean, if we get like an overall market rally tomorrow, a lot of these oil and gas stocks will get some love too, for sure, 100%. Look at the semiconductor triple leveraged bear fund, SOXS, up 18% today. I mean, all these chip stocks are getting crushed. Nvidia, AMD down at nearly 8% right now. Tesla is your other big news of the day. Tesla down 7% after they announced that they will be increasing their prices, which this to me is interesting because if a company announced they're slashing prices, you got to assume demand is like on the floor for that product, right? People cut prices when demand is low for their products and they want to get it out there. People typically raise prices when there is a lot of demand. I don't know if that's the case here. It could just be essentially that they're trying to offset some like rising production costs, so they have to increase their prices. But to me, I mean, I don't know. Like, I think we'll have to wait and see. Like, I think we'll know more after Tesla's next earnings report. You know, how much has demand really dropped for some of the Teslas? And I mean, think about it. Like, if you were borderline, you know, being able to afford a Tesla, and now the car payments, because the interest rates are higher. Like, there are a lot of other cheaper electric vehicles out there that you can go to, and nice ones too. Like, whether you're talking Audis, Audi, of course, is owned by Volkswagen. I don't know. I mean, I would be scared to buy Tesla right here, unless you like bought it here knowing you want to hold it for 10 plus years. Then I don't think it'll really matter if you buy it at 650 or 550 or whatever. But I mean, by basically all fundamental metrics, Tesla is still very, very expensive. Forward PE of nearly 60, which is lower than it has been historically in the past, but a price to sales of still more than 12. So, but by basically every single metric that you can look at, Tesla is still very, very overvalued. So I think part of what we're seeing right now in terms of just a lot of the froth coming out of the market, a lot of more traditional investors are looking at Tesla and looking at ARK and even looking at companies like MicroStrategy as signs of when we could get that capitulation, when we could finally get, to the point where we've bottomed out, sentiment has hit. Basically, people saying Tesla needs to come down to a reasonable valuation. Otherwise, we're still in this frothy market. So we can talk more about the Fed's move to increase rates, 75 basis points. I like how Bree really did his research and had a plan in mind, but he forgot structures and transitions. All right. It's good feedback, Shelly. Always welcome to take new feedback. We're changing the show up now that Spencer is gone. We'll be doing some more segments. So we'll be doing some different, games, things like that, just to keep the show fresh, keep new things going. So if you guys have any ideas or have any feedback, always feel welcome to throw them in the chat. And yeah, I don't know how to say this name. I'll just say Mr. Torres. Thank you. We need some love here. 235 people watching, only 19 likes. Let's get those likes up. Before we get our next guests coming up. Let's show them some love. Let me go ahead and then also let me know in the chat what stocks you guys are watching today. Because on days like this where it's just an absolute bloodbath, I do want to see the companies that are kind of lagging. Like, for example, the Qs are down 4%, but Tesla's down more than 7%. So that's showing me even in a weak market, Tesla's showing weakness. Again, there was news there. We just discussed that. But I want to see what's doing like better than the overall market and what's doing worse. Apple down. See, Apple's going to be pretty in line with the S&P and the Qs typically. So Apple's down 3.7%. That's essentially exactly what the Qs are down. So Apple's down actually a little bit less than the Qs are. The S&P is still down more than 3%. Something that I think would be interesting here that I'm starting to look at, I'm not really ready to buy any because it's still so weak. But looking at this Home Depot chart, we're getting down to this 270 level. If we zoom all the way back, you can see this wasn't pre-COVID. This was February 2021. We have this meaningful, kind of significant support where you have multiple points here at 284. So we've blown through there, and the next support level, you got to go a little bit lower than that, 260. But basically, with the rising interest rates, homes are getting more expensive. People, I don't think are going, people that were maybe borderline being able to purchase a new home might not be able to now with the rising mortgage rates. So what are they going to do? They're going to spend that money that they would have put toward their new home fixing up their current home. That's one bullish catalyst for Home Depot. Second bullish catalyst for Home Depot, and I don't really like the idea of investing based on this and trying to make money, but it's what I've seen as far as data out there that a lot of people that I've talked to in the insurance industry believe that this year is going to be a lot worse for like storms and hurricane season and tornadoes and stuff. So basically, I was talking to someone who, I won't say which insurance company they were at, but he does like damage claims for storms like that, and was saying we're already seeing like a huge increase. He's like, any company that makes shingles, roofing, anything like that is going to make a killing this year. And you got to think about things right now that have things right now that have inelastic demand. So things that have elastic demand, that price elasticity, or sorry, the inelastic demand is like gas, right? Whatever gas prices get to, I'm still going to buy it because I need it to put it in my car and I need to drive to work. Food has inelastic demand. It doesn't matter how much groceries are going to be at the grocery store. I'm going to have to buy them anyway because I got to eat. But things that have elastic demand are like flights. Like if I was going to fly to California this weekend, and the flights were $350, but now they're $500, now I don't want to fly. So I don't want to invest in anything that has big price elasticity right now. But things like roofing, things you need for your home, are pretty inelastic. But with that said, the actual home improvement things, like what we saw a lot of people doing during COVID, right? People got their stimulus checks. Oh, I'm going to fix up my bathroom. I'm going to go out to the backyard and redo the patio. Things like that have price elasticity, right? People aren't going to do it as the supplies get more expensive. And we also talked about this a few months ago, just in terms of what stocks and what sectors do the best in recessionary times. We looked back in 07, 08, and the dollar stores did really, really well, right? Your Dollar Trees, your Dollar Generals. Let's go to a weekly chart and go all the way back to 07, 08, because if you look at these charts, I have a feeling they look a lot different than a lot of other charts at that same time, right? It wasn't immune to any dip, of course. We got that here, but even here, January. All right, so starting in January 08, this thing was on a steady upcline. It went from about $8 to 14, so it's nearly a 50% gain. So again, that was January 08. Let's compare that to the SPY at the same time. And I could be completely wrong. Maybe that's when the SPY kind of bottomed out too. No, see, this is January 08. Or no, sorry, that's June 08. This is January 08 in the SPY. We dropped this much more while Dollar Tree was going up. Let me go back there just to double check. Yeah, January 08, that was like the top of the market. That was the bottom for Dollar Tree. So things like that, I think you have to find these companies that actually do well in recessionary times, and it makes common sense kind of why Dollar Tree would do well, right? If someone would typically shop at Walmart, now they're going to Dollar Tree because they can't afford Walmart anymore. So Dollar Tree, Dollar General, those are interesting right now to me. But I think I'm not convinced. I still need to see more, and we're gonna see it more, but I don't think, like, I just think there's so much demand out there for everything that it would be hard to get to that 07, 08 um, level of recession. All right, guys. Again, here in about 5 minutes or so, we're bringing on Steve Kalayjian. Not only the man with he might have the most screens of any trader I know. So I'm excited to get Steve on, see what Steve's been watching. Give me some tickers in the chat. I see Matty Ice in the chat talking about gold, GLD. I just don't know. How did gold do last time we had a big recession? I'm pretty sure it didn't do that well. Yeah, I mean, gold didn't really start coming up till, I don't know. I mean, I guess it held its value better than the market did. That's for sure. But gold it's just not that interesting to me. Like we're looking at monthly candles here of gold. Gold's actually been, this is a beautiful chart. This beautiful rounding bottom pattern. You can see just like, once we bottomed out and you get that upswing, you know exactly where it's going. And then you want to take out that previous high. We did that. We made new highs. And then we're kind of doing the same thing again, just on a lesser scale. So gold is definitely interesting. How about a gold miners ETF? There are a few. I mean, there's like JNUG, which is the Direction Daily Junior Gold Miners. There are a bunch of gold ETFs. You just got to go out there and look. We talked about copper. I do think some of these copper metal names are pretty interesting. Easy Mike is in Palladium. Yeah, any rare metals. I mean, any miners right now, like you got to think will be a little bit safer than the overall market right now, just because of the nature of their industry. What's the one company? Just Natural Resources. Yeah, NRP. Like something like this. Oh wow, we're looking on the monthly cap. I mean, this has to be a. I don't even know. Was this like a reverse split or something, or is this stock just this beaten up? But something like Natural Resources is pretty interesting to me with a 5.2 PE, higher than, 5.2 PE price to sales. Price to sales is still pretty expensive. Let's see the dividend yield, 7.2%. So Natural Resources could get interesting. This is something I'm watching for sure. All right, I'm catching up on the chat. Matty Ice says, I was reading an article the other day with a long-time trader who said during the recession, silver actually increased a stronger rate more than gold. That's interesting. I haven't really been watching silver at all. I honestly haven't watched silver since, remember when Wall Street Bets tried to squeeze silver? Like there's a lot of things out there, typically we find things with low floats that you want to squeeze. Silver, I don't think silver has that low a float. Cleveland Cliffs. This was a Get Technical favorite. Oh, here we're on the monthly chart here. Not going to get that great an idea of what we've been doing recently. Here we go. All right, so Cleveland Cliffs, we went from 33 bucks in April. So this was 2 months ago, down to 17. What is going on? Shares of metals, mining, and chemicals companies are trading lower as the materials sector drops. Wednesday's Fed rate hike announcement has caused concerns of slowing economic growth, which could impact demand. That makes sense to me. But look how cheap this thing is. Holy cow. 0.4 price to sales, PE of 2, forward PE of 2.8. This thing is cheap. All right. Let's go back to our news feed, see if we're getting any market moving headlines right now. Let's do another quick check on the S&P and our major indices before we get to our first guest of the day, Mr. Steve Kalayjian. He'll be on in about 2 minutes here at noon Eastern. S&P not really making any crazy moves. Let's go to the Qs, still down nearly 4%. Let's go to the chart. What do you guys want to look at? Let's look at some 10-minute candles here. Yeah, I mean, like I said, guys, if I'm day trading this, I'm watching the lows of the day, seeing do we bounce off there. If we break through them, I'd suspect that we have a little bit further to fall. But if we bounce there may be a little trade to make there, a little play to make. I wouldn't hate that. I'm not saying go out and do that. This is not investment advice, but I might do that. If we hit this low, which again was, I'll get the exact low here on our Benzinga Pro, 270.74. if we get around down here, even if we don't get all the way down there, just if we get, which we are near there right now, we're at 270, 70. So we're about $1 away from there. If we get this little bounce, then I would play it, and you have a good target to the upside here where you have this resistance right at 275. So again, I'm not saying go do that. I'm just saying that's a potential trade. And on the other side, if we break through this low of the day, I might buy some puts that expire tomorrow and just try to scrape 20% off of them or something and sell them. Alrighty. Couple minutes early, but if my first guest is ready, Steve Clay, maybe he'll give me a thumbs up or something in the background. We'll go ahead and bring him on, see what Steve's been up to, see what he's been trading. I see the thumbs up. So without further ado, let me go ahead and give Steve our very special introduction video, and we'll get him on the show. Mr. Steve, how you doing today?
Hey, Aaron. Good afternoon. Hey, everybody. How are you?
I don't know if you can say good afternoon yet. You got one more minute, then we're afternoon.
Good morning. How's that?
Perfect. What have you been up to, Steve? It's been a while since we've had you on the stream.
Yeah, Aaron, great to be with you. Well, basically, we felt that, when we got that low down at the 38.06, the bounce up to the 41.08, the market kept, ever since I got the big weekly sell around the 45.30 on my work, we never looked back on the S&Ps, and we just kept on making lower highs continually. And I knew eventually we would go into bear market territory. We've been just trading. We had a big sell this morning at 9:45. We got a great strategy that lined up around the 10:30 time period, about the 93 level on the S&Ps. Everything set up beautifully on that strategy, and everything just pushed down to new lows after that. I think that if we do get one more, I'm getting a roll over here on the 15s. I think if we make new lows here, I think we're going to get a monster short covering rally in the next 1 to 4 days. But again, to lower highs, I don't think this move is over by any means. I think that a lot of people are caught here. And I just continue to think that, you got to recognize the markets now, and we're in a bear market. Obviously, we're down over 20% from the highs. So, that's, Wall Street standard is anything over 20%, you're in a bear market. But, we saw these, once I got that big sell on the weekly charts about 2.5 months ago, we never looked back. The high was about, 48.08 on the S&Ps, and very frothy up there. And we're down almost 1,100 points off that. And, so I'm expecting, if we do get a monster new low here today at the end of the day, I'm expecting between now and the next 1 to 4 days, a monster, because there's no bigger rally in the markets than a short covering rally. And I think that's going to fuel. Plus, we're probably at one of the most extreme oversold conditions I've seen in the last, probably a year. So, we're just trading them. We're just looking here to trades and not fall in love with them. And I don't think this is a time to buy and hold. I don't think you're out of the woods yet. And, to see the Dow break 30,000 just on an intraday basis is pretty significant. It's been well over a year. We've held above that. So I don't think we're out of the woods yet. But great trading opportunities, great volatility here in the markets.
That's what we've been talking about a lot. With this volatility, it makes for some. If you're a nimble trader, getting in and out of day trades, can be a good environment. I mean, it's hard. It's been unpredictable, but you definitely have that volatility that you want. But for buy and hold investors, like you mentioned, it's not great at all. And I mean, and do you, Steve? Do you, if you have a screen or charts you'd like to share, you're more than welcome.
Oh, well, I mean, you can see I have my 39 screens behind me, and so I'm able to see the whole world right before my eyes. And but I have my software built on various different sites like Ninja, TradingView, and TradeStation, and other applications that people all around the world use. So when I stream all day long, people can see exactly the same type of what I'm using on my telestrator on around the world using those different various different platforms. But right now, like I said, at 9:45, my indicators and all my algorithms and everything lined up beautifully, and I got the big sell at 9:45. We waited patiently for the first bounce at 10:30. We got it, and bam! Within 30 minutes, the S&Ps dropped over 30 points on the S&Ps. Nasdaq dropped well over 100. So we're able to, teach these strategies each and every day here. And then what we try to do, is to obviously, Aaron, is just compounding your returns each and every day, make great gains, and look for another opportunity, along the way each and every day, and then come back again the next day. Again, I don't believe this is the buy and hold environment. This is a trading environment, volatility like you've never seen before. Yesterday, after the FOMC announcements, you saw it push up above 3,800, then it pushed down to the 37.23.5, and then blink in 40 minutes, they're above 38.40. So, I mean, these are insane moves that we're seeing. And, this is phenomenal markets for people who are intraday day trading.
Yeah, 100%. And so I just have a chart of the S&P pulled up. Do you have a level in mind to the downside where like you would want to get long, or are you
I
more
think,
just
I think the 3,200 level, the 3250 level is something I've been looking for quite some time. And ultimately after that would be the 2850. I don't know if it gets that low. But ultimately, we are extremely oversold. So like I stated earlier, any bounce, short covering rallies are the most vicious rallies. Even bull market rallies can't compare to short covering rallies in the bear market. But I do expect lower highs and ultimately pushing down like it's ladder all the way down, ultimately to a point where the market will, build a base and then resume the uptrend, and sometime in the next 8 to 10 months, maybe from there.
Yeah, and I mean, I'm looking at the RSI. It's kind of hard to see on this purple line, but on the weekly for the S&P, we're down to 30 right now. So we are getting, if we dip below 30, to that kind of extreme oversold territory. But I'm still, and I know you're more, in and out day trades, doing quick, looking at more what's going on intraday in the weeks and stuff. But I'm looking at from a macro perspective. Like, I really think we will get a lot of kind of, bad earnings reports come July and stuff. And that's where I think maybe we'll see us get down to that 3,200 level. And then that's when sentiment will really bottom out and allow us to kind of finally capitulate and come up from there.
I agree. Earnings is going to be a big factor in the next few months going ahead. But what really caused this is the Federal Reserve. Honestly, is that their mandate was 2%, right? They've been jumping up and down for years. That the Federal Reserve's mandate is to fight inflation, and then if anything over 2%, their target. But we got 8.5%, 9% inflation. So what they did was they really were way behind the curve on this, and they never really raise rates gradually to try to compensate the inflation. But we're seeing here where I'm hearing stories of people who are just struggling beyond, based upon the surge of pricing of gasoline. I mean, people just don't want to leave the house because I almost saw $6. I was almost $6 gasoline here. And
where are you at? New York City?
Yeah, well, outside of New York City, and I live in Westchester County, and everything's super expensive, from milk to food. I mean, you see the numbers that get posted, that they're staggering. I mean, how the Federal Reserve allowed that to happen, to see how the American people really struggle, and this is what the cause of the decline is. Had I think they'd taken a different approach, was gradually raise rates accordingly, a quarter here, a quarter here, a quarter here, a quarter here. I think what spooked the market is the aggressive tone here that they took, the 75 basis points. It really, to be honest with you, was no surprise by many people that they were going to raise by 75.
Yeah, and I mean, I just it's so tough because like we talk about the gasoline prices, and a lot of economists are out there saying the Fed raising rates isn't going to do anything to bring down gas prices. So then you have the potential problem of the raising rates creating or slowing down the economy, potentially creating a recession. in addition to gas prices still rising and other, other inflation. And then that's where that kind of dreaded stagflation comes in. So
Mhm.
I don't know. I'm not convinced the Fed or Powell is making the right calls right now or even knows
I
what they're
I
doing.
agree with you 100%. And Jamie Dimon came out, I believe, about a week or two ago. I believe he stated that gas oil could get to 150, 175. Can you imagine $12, $13 gasoline or $10 to $12 gasoline? What would it do to this country? I mean, if those predictions, if Jamie's correct on those numbers, which is staggering, you've never seen this in your entire in my life. You know, I mean, this is the highest I've
I
seen it.
Yeah, and I want to get next week. I'm gonna get an oil and energy expert on the show because what I really want to understand is uh, I remember, when I like first started driving, gas was like $4 it was like 2012, 2013. Gas was like
Hmm.
$3 or $4 a gallon, really expensive. But then it of course came down, and I can't remember exactly why, oil or gas prices were that high then or what ended up causing them to come down. But um, right now it seems to be a lot of different factors there.
Well, I think, a few years ago, the United States was more energy independent. And now I think we're importing more oil now than ever. And so I think that's fueling this as well, too. But I also will tell you what can hamper the price of oil is when you see less Americans driving. They're not going to be able to afford it, $7, $8, $9, $10 gasoline prices. People just will, they'll just throw up their hands and just say, this is not worth it. It's going to cost me, $100 a day just to go to work. You know what I'm saying? It's just not worth it to some people. And can you imagine the commercial vehicles and diesel? Diesel will be $17 a gallon. If
Yeah.
those numbers are, if Jamie's correct on, if I hope he's not, but if the 150, 175,
Jay DeRoma saying, could there be gas rationing, aka the 70s? I don't know if we're there yet. I'm not.
no, no,
Let's
no,
not get there yet.
no.
All right, Steve.
I don't think there'll be gas rationing. I think that people will just stop driving. I think there'll be a surplus of gasoline at that point.
Right. So, Steve, I'm curious about like specifically the trades that you and your group are making. Are you doing options? Are you doing, what are you guys doing?
So a lot of everybody, mostly futures, mostly equities, ETFs, and index futures. I'm not really, well, like when we get big buy and sell reversals, and we get those, great strategies, long end or short, then people jump in on the options market on those underlying securities. But mostly trading stocks, trading futures, ETFs, and index futures. And then when we do, like I said, we get these big buy and sell reversals like we did today. And when they get up to certain levels, then they'll start putting on, buying puts or selling calls or various different options on the underlying securities like Microsoft, Goldman, Nvidia, Netflix. We look at the big cap stocks each and every day. We look at the same ones each and every day.
Got it. Well, where can folks find more from you? Join if they want to.
Might come to my website, TradeEasy, TRADE, capital E, capital Z.com, and looking forward, to teaching everyone. We stream every day from 9 to 4, and I have my software that, like I said, people can look at on TradingView and get we teach.
Can you give me the URL one more time?
www.trade, capital E, capital Z, TradeEasy.com. And people can reach me. I'm always posting on Twitter. I give out my phone number to everybody. I speak to everybody around the world. So it's really. I'll tell you one thing. I've never seen more people just coming to me and just wanting to learn to trade these markets because they see the volatility, and it's really exciting. And at the end of the day, it takes a little learning curve to learn what I'm teaching, but after that, then people grab it and they get a hold of it, and they really understand what we're teaching here, and seeing the strategies and seeing the pattern.
Right. That education is so important because, like, a year and a half, 2 years ago, when we were in the middle of the COVID markets, all these new people came in, and no education was needed because all you needed to do was buy anything, and everything was going up. And now the markets are a little bit different, and people are like, "Oh, I got to learn how to actually trade and manage risk and all these things." So,
That's a great point. That's a great point.
Go to tradeeasy.com. Check out Steve's work. Steve, it's always a pleasure to get you on. I think we're going to start doing this kind of weekly. So I'm excited. I'm excited to get you on the stream more.
Thanks, Aaron. And I'd love to do it weekly. And thanks for the opportunity. And thanks, everybody. Have a great day trading.
All right, Steve. You too. Have a great rest of your day.
Take care. You too, Aaron. Be well.
Stay green. Stay green. All right, y'all. That was Steve Kalayjian. Go to tradeez.com to learn more from Steve. Again, it's always important to get guys like Steve on who actually know what they're doing, know what they're talking about. All righty, y'all. Let's do another quick check-in on the overall markets before I'm joined by my next special guest, an in-person guest, whenever he's ready. The S&P 500 is down 3.37%. Your Qs are now down more than 4%. The Qs. Oh, boy. The Dow Industrial Average, your boomer stocks. I don't know who cares about those. I don't. Down 2.5%. Bitcoin, BTC, below the $21,000 level. So I just got some good intel because I've been seeing around Twitter and all these places that, Sailor's margin call price for Bitcoin is, 21,000 or whatever. Apparently there's a small margin call that comes in at 21,000 or below 21,000, but MicroStrategy and his whole fund isn't really at risk of blowing up until or unless Bitcoin gets to $3,000. All right, guys, we've got a surprise special guest. We're gonna go ahead and play our super special intro for him. Let's go ahead and get him on the show.
Wait, so why would MicroStrategy get margin called?
Because they're buying Bitcoin on leverage.
Also, is my microphone working?
Oh, AT. Can we get let us know in the chat if you guys can hear Luke.
Yeah, I don't think my microphone's working.
I don't think it is either.
I don't hear myself in my headphones.
Hold on. All right. You want to switch seats for a second? And I'll go get your mic figured out.
You keep going. I'll figure it out.
All right, hold on. All right. So yeah, so MicroStrategy's been buying Bitcoin on leverage, so that's why they could get margin called. Let's see. Look, we're gonna do some investigating live on the show here. Okay, so here we go. Michael Saylor says MicroStrategy margin call talk is much ado about nothing. He says on a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize, and we're 10 times over collateralized on that right now. So it sounds like they're,
Okay, so it's not like a real issue. Because I was going to say, I didn't think they were buying Bitcoin on margin, which they're not. It doesn't sound like. It sounds like that. How big is the loan? 200 million?
Yeah.
And so that's probably like a USD loan for operations of the business, I'm assuming.
Right. And so that's why that
then
was
the Bitcoin is the collateral against it.
That was my point, and that's why I kept seeing this thing on Twitter, and I went and talked to our resident crypto experts, Logan and Ryan, like, what's the Sailor margin call price again? And they were like, well, there's like whatever this like kind of marginal one, pun intended, at 20,000 or something. But then they're really not in trouble unless Bitcoin gets down to 3,000, which I don't know if we're going to see Bitcoin get all the way down there. And if we do, you got to assume they'll just buy more.
Yeah, and there will be bigger problems.
Yeah, there will be bigger problems.
We have bigger problems in the world.
If Bitcoin gets to 3,000?
Yeah.
What do you think would be, like, obviously the Bitcoin stocks, right? MicroStrategy, Coinbase.
Well, catch me up real quick. So I just got back from vacation yesterday.
Okay.
I haven't checked out the markets in about a week or so. I'm assuming we're up, and it's been a good week.
Well, if you would have talked to me yesterday.
I bought a ton of Bitcoin about a week ago. Went long triple Qs. How am I looking?
So if you went long on TQQ last week, let's see, we're looking at weekly candles here. You went down from about $33 to 21. So I don't know. I mean, in the last month, the TQQ is down 33%, so not great. If you would have asked me yesterday afternoon, Luke, I would have said we were looking great. The markets were rallying after the Fed's decision to raise interest rates by another 0.75%. But we are giving up all those gains and more today, which has been the story.
Yeah, it's been brutal.
It's been the story for the past 6 months. Like, every rally is just erased very quickly. And then replaced by an even bigger downturn. So we're now, I mean, if we just look at the SPY on a daily or on a weekly chart, we can see that we're now below our previous lows that we hit in May, and we're I don't know really.
Yeah. So like here's the reality: is I actually am just freshly back from vacation. Yes, it's been brutal. I've got 2 things I want to talk about today. First one is taxes. Let's use advantage of this market to save some money on taxes, how we can go about doing that. Second one is I want to talk dip buying as well. And I want to throw this one out to the crowd. Okay, market's obviously getting hammed. I was getting creamed in the market like the rest of us. Does that influence your day-to-day spending? That's the question that I have. If yes, put a 1 in the chat. If no, put a 2. When I'm out on vacation and I'm seeing, I mean, I had some really bad days, like 60K bad days, right? You're looking at that.
Maybe we don't need that appetizer.
That's what I'm getting at. Yes, I still bought my soft serve ice cream every day of vacation. We put your own toppings on, you weigh it.
But you were a little bit more
generally
careful.
speaking, I was a little more careful with the toppings. Yes. I'm like, I don't need that much cookie dough. But I'm curious, yeah, if the market moving like this impacts your day-to-day spending, put in the 1, if not, put in the 2. It seems like a pretty mixed crowd thus far. I'm mostly unimpacted. As I take a long-term view, right? I'm not day trading for income. I'm portfolio building for wealth. And so because I take a longer term view and I'm good about not just spending beyond the cash that I have, it impacts me less, but there's definitely something there.
So that's what I wanted to get at, because the way I see it, and I kind of try to compartmentalize, and I have my 2 separate investing accounts and strategies where I have my long-term kind of buy and hold, where I'm making contributions every 2 weeks with my paycheck. And then when that's down, it does not affect my daily spending at all. Like, I don't care. But my Robinhood YOLO options account, like, if I'm up like $2,000 on a day, I'll be like, oh yeah, I can throw $300 on this basketball game tonight, like, no problem. But if I'm down, like, no,
okay,
I don't need
you're definitely impacted.
I don't need to bet. I don't need to bet tonight. Like, I don't need to bet money on this game. Like, I already lost $1,000 in the market today. Like, I don't need to do that. So I'm impacted more by my like YOLO trading account than I am by my long term, because. But I do think, okay, so what you're saying right now with tax loss selling, so like, are you saying even in my long-term buy and hold, if I sold some stuff right now that's down 30% on the year, that I can then like use that toward my taxes at the end of the year?
Yeah, so that's exactly what I'm getting at. Let's do 2 examples. Let's do stocks and let's do ETFs. All right, so if you have a position in the long-term portfolio that's down, this is what I'm going to be doing some work on over the next several days. Take advantage of those losses for a tax benefit. So as an example, let's say that you own a lot of SPY, the S&P 500 ETF, okay? It's down 24% since it's high. Let's say you've been averaging into it, whatever it may be. But let's say you're down $10,000 on your position in the S&P 500 ETF. This is a passively managed ETF. Okay, it's passive. So what you can do is you can sell your position in SPY, and then you can buy an actively managed ETF that still is U.S. large cap stocks and should move relatively similar, and then you get to take full advantage of that $10,000 tax loss. And so what does that mean? That means that you dumped your one position, you replaced it with something similar, and the asset that you come out with on the other end is you now have $10,000 of income that you're not going to pay tax on. So
do you have an example of an actively managed ETF like that off the top of your head?
Yeah, there's a ton of them. Dimensional does one. GS has one.
So large cap active ETF.
Exactly. You go U.S. large cap equities actively managed ETF. So that's the example with the indexes, or the ETFs, and that's the move that I'm going to be making. As we talked about a ton of times on the show, about 70% of my total holdings are in the ETFs, U.S. large caps, U.S. small caps, non-U.S. Commodity baskets, etc. And so that's the move that I'm going to be making, rotating from those passive to those active ETFs. And don't sleep on the tax gains that you get by doing just a little bit of work. The little bit of work that you need to do is figuring out which ETF you're going to roll into, right? You first need to find the list of the active ETFs. I would recommend you go towards the ones with higher assets in them. Then you do a little bit of research on the holdings, right? You want to make sure that if you're swapping out an S&P 500, you're buying into something that should mimic the S&P 500. You're going to look for a large concentration in those similar S&P 500 stocks. So that's the little bit of work that you have to do. But again, let's say you have 3 ETF positions. If you're down 10 grand on each of them, that's $30,000 of income that you don't have to pay tax on. Let's say you're paying 30% blended tax rate between federal, state, local, etc. That's literally $10,000 worth of cash that you have in your pocket. So you're gonna get a check for at the end of the year.
Okay, I found one that I don't like the ticker though. It's
so in terms of moves that I'm making in this market, that's the move that I'm making right now. Again, taking a long-term view, right? Portfolio building for wealth type approach, and that rotation from the passive to the active ETFs is the move that I'm looking to make.
So is there a different tax? You're saying there's a different tax implication on a managed ETF?
Oh, sorry. Okay, I didn't explain that well. So here's what would be ideal, right? If there were no tax laws, here's what would be ideal. You would take your position of SPY that you're down 10 grand on. You would sell it. You would realize that $10,000 loss. Then you would buy SPY again. Right. Okay. So the only thing that changed is you realize the $10,000 loss. You still have the exact same asset that you had before. Doesn't work like that.
Okay.
They
closed that loophole.
They closed that loophole. Exactly. They didn't in crypto. So you can do that on your Bitcoin.
Okay. Because there's no substitute for Bitcoin, really. It's just.
Well, yeah. Okay. Let me say this. I'm not a tax expert, and it's hotly contested whether or not that loophole's closed. Whatever you want to file on your taxes, you go ahead and file on your taxes. Okay. There's been argument back and forth on that one. So you do you there. But let's go back to the ETFs, right? The ideal situation would be you own SPY, you're down in SPY, you can sell SPY, realize the loss, buy SPY again. So net, you have the exact same position, but now you also realize the $10,000 loss that can count against your taxes. Doesn't work like that. They close that loophole. What you have to do is you have to switch from a passive to an active ETF, or the other way around. You switch from an active ETF to a passive ETF, right? So let's say you're down a ton of money on ARK, right? That's an active ETF. You could switch. You could sell that, realize the loss, buy a small cap growth passively managed ETF. And then you would still have similar exposure without the stock picking, but you're able to realize that tax loss. So that's a switch that you have to make on the ETF side. You have to go a passive ETF to an active ETF, an active ETF to a passive ETF.
I like that. I like that a lot. So I'm looking at the dimensional U.S. equity ETF right now. We've got it pulled up on.
Yeah, well, give us a symbol on that one.
It's DFUS. This is why I said I don't like the ticker. It's like doofus. Like it'll make me feel like a doofus buying this, but maybe not.
Yeah,
maybe,
it's not great.
Maybe it's that reverse psychology. But I'm on.
The question is, how long till you can buy SPY again? Does anybody in the chat know that answer? I think that it's 30 days. I'm almost certain that it's either 30 or 90 days. But somebody's gonna have to confirm that.
Yeah, and maybe maybe what I'll do is next week bring on some sort of tax expert that understands, like, because what I'm curious about is specifically within, like, would it be different doing it in like a Roth IRA versus doing it in just a normal individual like brokerage account?
Yes. Do this in a cash account. Okay. It needs to be a cash account.
It needs to be a cash account.
Yes. not a retirement account.
But so are you still making like contributions to your ETFs right now, or have you stopped buying?
So that's the second topic. Really quick, let's round out this tax issue really quick.
Okay.
So that was the ETF side. Let's talk about the stock side, the individual equity side.
Okay.
Really simple, right? You're long Home Depot. You're down a ton of money in Home Depot. You sell that, realize the loss, you buy Lowe's.
Oh.
Right. It's those sorts of pair trades where again you take advantage of a lot of that tax loss harvesting.
So all right, I'm trying to think. I'm down a lot of money on QuantumScape. What's my peer? for
What's
QuantumScape?
QS's business? Is that a cloud?
EV batteries.
Oh, I'm way off.
Way off. EV batteries. Let's go to peers here.
Does it move with all the EV stocks?
Yeah.
Because if so, then maybe you buy Neo or something, right?
I'm also down a lot of money on Neo.
And here's why I'm saying that is because QS is a highly volatile EV play,
right.
right? Neo is also a highly volatile EV play. I imagine they move pretty similarly.
So maybe I buy some like
move.
XPeng or ChargePoint or Plug Power or something.
Yeah,
like
ChargePoint, Plug Power may be better. But with Neo, you are also buying into the China macro issue, which is something that you're not getting with QS.
Yeah, but right now, I mean, some people think there's might be more macro risks buying U.S. equities than Chinese.
Yeah, but like my I know, but like some. Some of my big individual stock positions that I'm getting killed on. Let's go pick them out.
Well, I wanted to ask you about Netflix. Have you cut your Netflix yet?
No. Now that's like where we should get to the dip buying.
Oh,
so
okay.
Netflix right now, yeah.
No, so you have two options here with Netflix. You're down, I don't know what percent. I'll guess
51.
All right, I was gonna guess 45. So you're
You're
down
pretty close.
You're down 51% on Netflix. You have two options here. You can do what we just talked about, cut Netflix and then buy Roku or something. Or your second option would be averaging down here and lowering your average cost. So dollar cost averaging is actually very controversial among a lot of investors. Some people say like you do not want a dollar cost average on your losers. Like you're just continuing to buy stocks that aren't performing well for you. The flip side to that is if you are very highly convicted and you know the company's going to come back, then it's a smart thing to do.
Yeah, see, that's exactly what I think the move is, right? So let's throw out two hard examples. So two big stock positions that I have right now on are Netflix and Facebook, right? Not anything super interesting or exciting or a stock you've never heard of, but they're two big stocks that are two stocks that I have a big position in. Netflix, I'm more interested in the Netflix story because of the valuation depression in the space, right? All of these streaming stocks are getting incredibly cheap, right? They're trading at less than 10 times EBITDA. They're trading at 3 times sales, etc. So that's a position where tax loss harvesting a Netflix and then replacing it with another streaming play like a Roku or something along those lines is interesting, I think. Because I still have the general thesis on the space, which is that valuations in the space got too compressed. I haven't owned Netflix since it was $400 a share, right? I bought Netflix once it had already gotten cheap and was trading at below 3 times sales.
Yeah, you bought it right when Bill Ackman did, right?
Exactly.
Right here, or after this big first.
That's that first one, exactly.
And
then Facebook on the other side. Let's do that. So Netflix, it's a thesis on the general valuations in the space. That's where a rotation and take the tax benefit may make sense. On the other side, you have a Facebook ticker META now. That sounds weird.
I've done that literally probably like 150 times since they switched tickers. Like gone in Benzinga Pro looking for the FB, and then been like, oh.
And so Facebook is a stock that I have a specific thesis on the company itself, not on the industry, but on the company itself. And that's where I'm going to hold on to the Facebook position. And again, you have Facebook that's trading at something like 8 times EBITDA, 3 times sales. It generates $25 billion of cash a quarter. It's still growing 20%. They did have their growth slowed 20% year over year. They did have a slower quarter, which is what triggered that initial sell-off. But it was still the second best quarter in company history, right? There's more we can talk about with Facebook. And that's one where I'm just holding on to the individual stock because I have the thesis.
Yeah, and I want to address this in the chat real quick because I saw Kyle when I was talking about averaging down. He's saying, exactly, don't add to a loser. You don't know the company has come back. And that's what I was getting at, where I think the dollar cost averaging thing, I don't think it's either always bad or always good. I think it's just a case-by-case basis where, like, if I had been averaging down on my QuantumScape position, like, I would have just been losing more and more money. But if I'm dollar cost averaging into the S&P 500
That's what I was gonna
or
say.
into, like, Berk B or something, you know, like, that's different than averaging down into QuantumScape. So I think you just got to take that on a case-by-case basis and determine the risk and reward. And
I
figure it
think
out.
unless you have a hell of a thesis on a stock, the indexes are the place to dollar cost average.
Agreed.
My general rule of thumb has always been 5% pullbacks in the S&P 500, roll a little bit more in.
So
Right? Not a crazy ton more in, but start rolling a little bit more in.
Is there a spot on the S&P 500? You mentioned we're already down
23.5%.
from the highs. Is there a spot where you would just be like, all right, I'm going long here? You know, like if we get down to like 320 or something, or
Rules based, baby. I'm gonna slowly average in.
all right.
Not into the individual stocks, but into the indexes. Yeah, I have not added in the past couple of weeks. I'm due, but keep slowly averaging in. And again, this is not about a day trade or a swing trade, right? This is like, you know, portfolio wealth building. If the S&P 500 is lower 5 years from now than it is today,
We're in trouble.
we're fucked. Yeah, we got bigger problems.
Oh, man.
And that's sort of the stomach of steel. And that gets back to the first question that I asked too at the very top, which is, how much does it impact your day-to-day spending when the market's like this?
Yeah.
It definitely impacts me. I don't think is a ton. You know, maybe I'm biased. I need to look back at it, you know, 6 months from now. But that it's that long-term thesis that keeps me sane.
And that's why, and I was talking with David Green about this when he was on the other day, but I almost feel bad in the sense that, like, I am not worried or really care that much that the S&P is like down
And shout
so
out
much.
to Pooh Shiesty in the chat. It's pretty cool.
Yeah, Pooh Shiesty, he's averaging into Palantir. We'll talk some Palantir in a second because I just have not. I'll pull the stock up and I haven't looked at it in like months. It could be at, I'm gonna guess $9.
We should get Pooh Shiesty on the show.
All right, I'm guessing it could be $9. But anyway, what I was saying about the S&P 500 is it's not that big of an issue for me or you, Luke, because we're like, you know, younger, adding in our accumulation phase. It's actually almost good in a way that we can just add more shares at a lower cost, and then over, you know, in our retirement portfolios in 30 years or whatever, it's not going to matter.
30 years. Come on now.
With 20
Oh, Jesus, this seems so long.
for retirement.
You know, 3 years.
3 years. Okay, yeah. When we're opening our retirement accounts in 3 years. No, but if you're like closer to retirement and you have like a 60-40 portfolio and you're looking at it and it's down 25%, and you're like, shit, I guess I'm not retiring next year. I guess I gotta work like 2 more years. Like, I feel really bad that like some people like that are in that position right now. I'm grateful to not be worried about it in that sense. But yeah.
All right, pull up some Palantir.
All right. Well, what's your guess? Price guess.
Oh man, I haven't looked at the stock in so long. This was a SPAC deal, like the OG SPAC deal, right? Or was it a direct offering?
I don't remember if it was a SPAC. Or
Somebody in the chat remind me. But was Palantir like one of the first SPAC deals, or was it a direct offering, like a Spotify type play? I don't remember.
In my mind, some of the first, like at least the bigger SPACs. Laser was one. DraftKings.
DraftKings was an early one.
Who are some other like? No, CCIV, Lucid Motors. That was like the biggest one. I feel like.
I know it's a Peter Thiel company.
Yeah.
All right, who should
direct-
saying that?
A direct offer. Yeah, I think that's right.
Yeah.
All right.
All right. Give me $7.
$7. All right, I went 9. Let's see where we're at.
Wait. All right. We can't ask the chat. Enough people know the stock. Yeah, if you're in the chat and you want to guess what the price of Palantir is, go for it. And was that tax loss harvesting discussion useful for anyone? Anybody gonna take up that strategy with me?
I'll be honest, it was very useful to me because I had never thought about that pair trade like you were talking about. as far as taking a tax loss and then still being invested in essentially the same investment. Just
So that's my thing, right? Is I'm going to have essentially the same positions that I have, but because I'm doing it tactfully, I'm going to pay like 0 taxes this year on income or anything.
Hell yeah.
Yeah.
I mean, we're I'm paying taxes to pay for Jerome Powell's salary for him to fuck me. Like, I don't want to do that. I'd rather not pay those taxes.
All right, where's Palantir at?
765. So you're pretty close.
That's pretty close.
This one, all right, here I'm on the weekly right now. Look at the daily. So remember how long this was? Like, this was one we were selling puts on because it was just trading and then it's like $20. Like, it was never dipping.
Yeah, we sold a lot of puts on this stock,
and it was just always trading at this $20 range. And then finally, I mean, it's just been so out of favor. But Pooh Shiesty in the chat was saying he's averaging in because it's tied to government and has government contracts. That's interesting because you have that kind of guaranteed revenue. You're locked in. Whereas a lot of companies' revenue might be very volatile in these next coming months, next coming years. But these companies that
like you're saying, private sector and consumer revenue.
Correct. Whereas like government contracts are going to be pretty stable.
That's interesting. Pull up some of the defense names. Give me LMT.
LMT. Those have all come down a lot since they got that big boost from the Ukraine-Russia thing and have come down basically to where they were at before. But what's interesting is even looking at before Russia-Ukraine, where we got this big leg up, there was strength in Lockheed Martin. I mean, this thing moved from 344 to 400 in the span of 3 months. Maybe that's people knowing that what's coming or seeing what's going on in the geopolitical sense and sensing a war is coming or something. But yeah, I mean, this thing's gotten beaten up.
The defense names are interesting because we're starting to run out of military supplies. Okay, certain military supplies. Well, like, what's the shoulder-fired anti-tank weapons that we gave a ton of Ukraine to? Is it a Stinger?
Yeah, I think so.
Like, we're out.
We're out of Stinger missiles?
We're out. Yes, if there's a conflict for the U.S., we're out.
Yeah, but yeah. So if tanks from Mexico are coming to invade us, we don't have anything to take them down.
Yes, exactly.
We'll have some drone. We'll have some.
But here's what I'm saying is like you're still gonna have the stockpile effect, right? So the revenue is gonna be more defendable.
So on the same kind of keeping the same conversation going, Aero Electronics. This is a let's just go to the overview real quick.
Give me the ticker on this one.
ARW.
Okay.
Aero Electronics is a global distributor of electronics connecting suppliers of semiconductors, components, and IT solutions with more than 180,000 small and mid-sized customers in 85 countries. So when I was at the Detroit Grand Prix on Belle Isle a couple weekends ago, they had a huge, like, I guess McLaren is teamed up with...
So Javelins. Thank you.
Okay.
Jade Aroma.
We're
out. If somebody wants to do the quick research on who makes the Javelins, the government's going to be buying a lot more of those in the years to come.
Yeah. So Aero, they had this whole like McLaren thing. They had this like sick car that was an Aero McLaren car with all this technology in it, I guess, whatever. That's not the interesting part. What was interesting was I was looking at the car and this lady next to me was like, I don't know how I started talking to her, how the conversation started, but she was like, yeah, I work for the Department of Defense. We are like huge customers of Aero. Like we buy a shit ton of stuff from Aero. And I was just like, oh, that's interesting. Because Aero's in the semiconductor space, so it's already been, kind of beaten up. But you can see it doesn't look like NVIDIA's chart or it doesn't look like AMD's chart. But it just got me thinking, like, oh, maybe this.
Pull up NVIDIA.
We will. Just this company that's pretty cheap, 5.3 forward PE, trading at a 0.2 price to sales. I don't even know if that's right. And that has government contracts could be interesting if everything else is really weak. So again, that was just kind of some word of mouth thing I heard from this lady at the race. So I got to do my own research and figure out what their contracts actually look like. But yeah, Aero's on my watch list for sure.
That's better than I thought it would be. That's NVIDIA.
Yeah, I mean, like when you compare it to a pre-COVID.
Yeah, there you go. Easy Mike has the one that I thought you were about to talk about. AeroVironment, the drones one. I think it's like AERO or something like that.
Yeah, we can talk about that. Let's touch on NVIDIA real quick. So this is what I'm looking at with NVIDIA. You have this kind of strong support level here where we're trading, and this is split adjusted, trading at just like 135 right here for months and months and months, like 6 months straight, just in this range. And we're approaching that range right now.
In my opinion, it's still the same as like what I was talking about with the Facebook, right? I'm still long Facebook because I have a thesis. Thesis is unchanged. I still believe in the thesis. But if you're gonna try to bottom pick any of these stocks, you better have a hell of a thesis.
Yeah, and I mean,
If you just want dip buying exposure, buy the Qs.
yeah. Do you think like we get back to these pre-COVID levels in Nvidia, 78, 79 bucks? That'd be another. We'd have to draw down another essentially 45, 50% from here.
What about Baba?
We said this months ago. If you buy Baba here, you're either gonna be really rich or really poor. There's no in between. You're not gonna. It's either gonna. I mean, Baba's been strong. Like it's up 20%. Like here, let's go to a monthly candle. It's down today 5%, but I mean,
So these are monthly candles.
yeah, at one point we were up like 20% month over month, but not anymore. We're up 7% on this monthly candle right now. But the high of it, I mean, like just relative to the overall market, looking at Baba, there had been.
I'm bringing it up because it's a cheap stock and it's not U.S.
Yeah, it is. So forward PE 12, price of sales 2.3. It's very cheap. For a company like Baba for its industry. I mean, you can find cheaper stocks out there, but it's going to be like some financial company or a miner or something. Like you're not going to find another company like Baba that's this cheap.
Yeah, and again, it's either going way up or way down.
Yeah, a true YOLO. Like
it's still a true YOLO stock.
Well, I don't know. Did we ever pull the trigger on some leaps on Baba?
I did.
Those are probably down a lot.
Let me see.
Hey, let's double down. Let's dollar cost average into leaps on Baba. That's the best way to dollar cost average.
All right, Baba, I've got the 190 calls January 20th, 2023.
We got time.
We got time.
We got time.
Plenty of time.
We would need a really big bull run from here.
It's not a large position. It was a $2,000 purchase, about $2,000 with the calls. You got plenty of time.
All right, let's get the AeroVironment ticker.
And I love Kyle M in the chat.
Oh, it's AV.
About the NFTs.
What do you say?
He's going in on the NFT buyers. All right, let's do this. Put a 1 in the chat if you bought an NFT at some time in the past 12 months. 2 in the chat if you wanted to buy one but didn't actually pull the trigger. And 3 if you never had any desire and didn't buy it. 1, you bought it. 2, you had the desire, you thought about it, but just never pulled the trigger. You were pretty damn close, though. 3, if you just stayed on the sidelines the entire time.
I've never bought an NFT, but maybe now's the time.
I'm not touching an NFT. No way. Right now, no way. Pull up
DLPN or
no. Let's do the floor price. Pull up the floor price of Bored Apes. And then I'll tell you this one, okay? So this past weekend, I was at a restaurant. It's a guy's birthday, of his 40th birthday, big birthday. They bring out a cake that one of his family members had brought, and it was a Bored Ape cake.
Wait, okay, can we go back for a second? So
Wait.
So this was you were on vacation in Colorado?
In Colorado.
You weren't at dinner with this person. It was just they were just also.
They were in the restaurant. Yes.
Like right next to you.
Yeah, right next to me.
And they had a Bored Ape. Like, did you keep a straight face or like were you?
So, yeah. I mean, in the back of my mind. So our waiter is actually a huge Benzinga fan. Benzinga subscriber.
Really?
Loves markets. He literally sat at our table and I hung out with him the next day. He showed me around town the next day.
No way.
Yeah, it was great.
That's awesome.
Yeah, we've been texting all week since I've been back.
Hell yeah.
But like, so he was sitting down at our table and my commentary was, whoever made this man this cake probably doesn't realize that he's down 60 grand on his NFT purchase and doesn't want to be reminded on his birthday.
Right. Like that's
They think, oh, he's so excited about this. He's been bragging about this for 6 months. He's in early. He's been every conversation is, oh yeah, my NFT. I got my Bored Ape. Yeah. No, he's probably didn't want to be reminded on his birthday. He's down 60 grand and feels like an idiot right now. But pull up the floor price chart.
So, man, how do we get the chart of the floor price?
Just Google.
Google.
You got Google.com?
Yeah. Bored Ape floor price chart. Oh, you're.
And also when there's still 40th birthday cakes that are that are Bored Ape themed. We're not at the bottom yet.
Right. The Fed hasn't raised rates.
Yeah,
enough.
rates need to go higher. Add another 7.5.
Jerome Powell was there. That's why he's all right. Bored Ape Yacht Club. Wait, this is let's do a month. Oh wow. Well, it looks like it's come up a little bit.
Which one's a floor price chart?
Bored Ape Club floor price chart.
Yeah, which line on there?
I'm
guessing the thinner one, but I don't know.
Where's our key? What is it gonna tell us? Oh, so it's in US dollars and ETH. So the blue line is the floor price in US dollars. The black line is the floor price in ETH.
Yeah, we want the one in US dollars.
I mean, look. So at its height, the floor price was $411,000.
And what is it now?
That's literally the average home price in the U.S. If you look it up right now, it's like exactly that, $410,000. And then now it is $93,000.
Okay, so that guy with his birthday cake is probably down 100 G's.
Depending.
And again, his friend who made him the cake probably was like, he's been bragging about this for 6 months. Every conversation about his Bored Ape and how I need to get one. Oh god.
He's probably down more than, because I mean, even if he bought it back here pretty early, right? 210,000. Now it's
oh my
93.
God, he's down 200,000.
Yeah, I mean,
whoever got him that cake, I guarantee doesn't realize.
And that was probably expensive, like the cake part. Like that's not easy.
I took a picture of it.
Really?
Yeah, we should try to find his ape because it was his actual one. It wasn't just like Bored Ape themed. It was his actual ape.
That's pretty cool.
We should try to find that one. Because then we'll be able to see when he bought it.
I wonder if the baker who made the cake needed to see that he actually owned it. Otherwise, he's like, no, I can't make this cake unless you actually own the Bored Ape.
Yep. All right, a lot of speculation in the chat about my age. I did just have a birthday last week.
There's speculation on your age.
Yep.
Got to be younger.
Scroll up. You don't read the comments? I'm addicted to reading the comments.
No, I did. Oh, how old is Luke? Got to be younger than me.
Yeah, just keep see.
Oh man.
Throw the guesses up. I'm curious.
Seth Green had a tough week. Well, I thought Seth Green got his NFT back. No?
I don't know who Seth Green is.
Yeah, you do. He's an actor he's in like the Austin Powers movies. Oh, I'll show you a picture. You'd recognize him.
I'm not a movie guy though.
Really?
As you know. Yeah, Kylo, cake maker doesn't care about NFTs as long as you get paid for the cake. You paid for the cake in ApeCoin probably.
Yeah.
Down 30%.
I don't know. So there was this whole controversy.
I have no idea who that is.
All right, there was this whole controversy where Seth Green, he was like big in the early 2000s, where he was going to start a show using his proprietary, his like IP of his Bored Ape that he owned. Like he owned the legal rights to it, and they already had this show in works, and then the ape got stolen, and then it became this whole like legal question of like, does he still have the legal rights to like do this show, or does he not own the rights anymore? And like it was just so funny because on Twitter you'd have these like lawyers arguing about it as if there's any legal precedent to like someone's JPEG getting stolen.
And Duke in the chat is saying he bought it back for another 111 ETH. Dude. Shit, that's a lot of money.
I know.
It's a QM.
That's yeah.
It's a quarter milli.
Well, what's ETH at now? 1, I think. Or 2. 1 point.
I don't want to know. I know what
you don't want to know.
At.
Let's see.
Put it on there.
All right, hold on. I gotta get my Benzinga Pro. Dude, I don't know what it is. My next computer, I'm not gonna get a MacBook. I literally can't open more than like 10 tabs, or my MacBook stops working. And it's like it's 2022. I should be able to open as many tabs as I want, and the computer should be able to run fine.
I agree. So I bought a laptop with 32 gigs of RAM, 3 SSDs. Yep.
I like how Benzinga Pro's not making me log in anymore. For a while, it was making me log in every single time.
All right, share your screen again.
1 second. It's gonna take a second. My computer's been a little slow.
All right, Happy Muhammad has it. $1,100. All right, so spend another 150 grand on it. Yeah, that's a bad day.
Dude, what happens if we see ETH dip below 1,000?
It could happen.
Yeah,
for sure.
I'm curious. Is anyone in the chat in the crypto markets in like 27, like when we had that first Bitcoin crash? I think the drawdown there was more than 85% from Bitcoin's like like highs to lows. I think it topped out around 17 or 18,000 in 2017, and then ended up dropping down to 2 or 3.
So, yeah. All right. So I was gonna do story time.
Yeah, story
I might
time.
as well.
Story time.
Age myself a little bit.
Okay.
But from when Bitcoin hit about $1,000 back then in that first bull run, at the Benzinga offices, we have all these TV screens around here. You guys can't see them, but there's TV screens everywhere. We had a dedicated TV screen, the primary one in the center, that just displayed the price of Bitcoin. It wasn't a chart or anything. It was a blast.
Oh, so it wasn't a chart.
It was literally just the price, the last trade.
Okay.
Would update. And every morning, we'd get in early because we're on the news team, right? So you get in at 6 a.m. Eastern. And we were just eager to see what it was at. And when it hit almost 20,000, we all lost our minds. My first Bitcoin purchase, I think, was a $12,000 average in that first run. Maybe it was even less than that. Maybe it was 5,000. I don't know. I don't remember. It was not much.
I went back in my. It
was $1,000 a USD.
I went back in my Coinbase history. My first Bitcoin purchase was a full Bitcoin. Guess the price.
Oh man, a full Bitcoin?
Yeah, I bought a full Bitcoin.
$280.
Close. It was like 430.
And what'd you use it on?
I plead the fifth.
You bought it for a reason, is what you're saying.
Yeah, it was quickly sent out of my account, basically. Say that. No, but that's like I was like 19. Like people were using like the Silk Road to like buy fake IDs, and like that was the use case for Bitcoin. That's why I like learned about Bitcoin was like because of that, because of like the Silk Road and like all this shit. But
yeah, I was trading Dogecoin back in 2014.
Yeah, I remember when Dogecoin took off, we went back and you found some of your college emails where your buddies, you and your buddies were like trading.
But it's not even up since then. Like even when it exploded, pull up a Doge chart. I don't know how far back you can go.
What do you mean it's not up since then?
Just pull it up. How far back can you go?
We can go to
See?
June 2017. Oh, from now? I thought you meant we weren't up like at our peak.
No. Wait, go.
This is 17 though, so you were trading it like years and years and years before.
Yeah.
You were probably trading it was like
pull up, see if you can find a further dated Dogecoin chart.
All right.
I think this is gonna crack everybody up.
Here's what I think is hilarious, and I've showed this on the show before, but I still think it's funny. So if you Google ETH price, like it doesn't have the chart built in, but it does for Dogecoin.
Oh, it does.
Yeah, it does
That's fine. I knew it did for Bitcoin.
It does for Bitcoin. It does for Dogecoin, but not ETH. All right, so max. Google's only giving me back to even
2018.
More recent,
go to CoinMarketCap.
CoinMarketCap. Dogecoin.
This will give us the full history. I'm willing to bet. Max.
All. 2013, 0.000, so 40602.
All right, and what's it at now?
It's at 5 cents.
Okay. All right, so it's still a decent run.
Yeah, I mean, even now, yeah, even with that's still up like 1,000%.
Yeah, it's still prices. A good
run. All right, chat. Any questions for Mr. Jacoby for us today? We have about 5 more minutes left.
we talked the tax loss harvesting.
We talked
the dip buying. We talked about the ETFs.
We talked crypto. What else have we not gotten to?
Is anybody buying the dip in cryptos? 1, if yes. 2, if no. I'm certainly not.
You have to have balls of steel to be buying Bitcoin right now.
Yeah. I want to see it.
What way?
1, if you're buying the dip in cryptos. 2, if not.
So I know this is a tough question because you're like, because if I ask like what price would you? So if you said, okay, I'd buy Bitcoin at 10 grand now, but then like once we get there, you'd be like, fuck no, I don't want to touch that. Like it's so weak, because like at that point we would have had to, be going down so much more that I feel like once we got there, you wouldn't want to touch it then either.
Wait, let me ask this one too. Would anybody be interested in getting user calls going again?
No, yeah.
Remember that?
That was the most fun part of the show.
That was the most fun part of the show. Back when we used to do this every day, we'd have users call in.
Yeah, we had a phone. We had a
That
specific
was a
phone
blast. We had a
number.
specific phone number. Yes, that was so much fun. If there would be, yeah, like, literally, it was
Yeah,
like
it's
a
like
radio station, like you're calling in to win tickets.
Yeah, it was like a
But
sports,
people just
sports
call
radio
in
show.
just to either rip on us or like pitch some really obscure stock. It was a blast.
That was the best. In like 2020, like they're in like the COVID market. Someone would give us a ticker you've like never heard of. You pull it up, it's like 20 cents, and they're like, "This thing is gonna go to the moon."
Yeah, this thing's going to $100.
Yeah,
yes.
easy.
All right. People are about the calls again.
All right, next Thursday, Luke, when you're back on the show,
We're gonna have the phone lines hooked up.
I'm gonna
yes.
I'm gonna make a calendar invite for myself.
It's gonna be like Jim Cramer's user calls, but entertaining. Right? It's not gonna be like I own Facebook and Google. Am I diversified?
right.
It's gonna be here's the sub-dollar stock that I think is going to 1,000, and you're gonna have to pitch us through it. Question about correction in oil price help prevent deeper market correction. Yeah, absolutely. 100%, like the chat's saying. All right, I got to get back to work.
All right, Mr. Jacoby, it's always a pleasure to get you on the show. Thank you for hopping on with me.
Thanks for having me. All right, what's up next?
Up next, we've got Money Mitch doing his thing. He's got some interesting interviews coming up. He's going to be talking to what?
Look at the last comment.
I'm going. I think.
Hi, my name is Kathy. I think Bitcoin, that'd be a great call.
Dude, yeah, that would be. I have thoughts on Kathy Wood that I just got to refrain because I'd probably upset some people. But anyway, Mitch has got some interesting.
I like Kathy Wood.
He's got some interesting interviews coming up. Armanda Acquisition Corp, little SPAC coming on the show. I'm not seeing a lot of SPACs, so that'll be interesting to talk to him. And
nobody guessed the age right is the answer, Shelly. Sorry.
Really, 29. Luke just turned 29. I just turned 25, so yeah. So what? You're targeting a 32 retirement to 3 years. So are you in the BlackRock life path 2025? Oh man. All right. Love you guys. Great show. Smash the like if you do not mind. Give us a subscribe if you have not already. We will be back. We'll be back on Tuesday because I'll be out tomorrow, and then Monday we have off for the Juneteenth holiday. But stay tuned for Mitch. He's got some interesting interviews coming up. This will automatically redirect you to there, so do not change the channel. Do not go anywhere. Mitch will be right here.